It's been a jittery start to the stock market in 2021, and lots of economists are calling for some storm clouds, some economic storm clouds ahead. I gotta tell you, it feels like 2008, the summer of '08. Let me explain why and what you should do about it. That and more coming up. My name's Mike Bernard. I'm the host of The Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Even still, because I'm bringing to you from the heart some rough news. I was talking to one of our CPAs recently, and then also with a client, and they were both just asking me, hey, what do you think about things? And I don't know if you know this, all of these videos, nothing is scripted or anything. It's just all sort of off the cuff and based on some organic feelings and whatever. And I said, I don't think we've seen, no one has a crystal ball. I'm not predicting anything. It just doesn't feel like we've seen the worst of this yet. It still feels like the economic storm clouds are brewing. Now, it's possible things could break up if you use the climate analogy, but it certainly seems like storm clouds are there. And I made a parallel. And I needed to create a video about this because it feels so clear. It feels like 2008. It feels like 2008. Now, when you say that, I'm not bringing that up to alarm you. I want to make a couple points on how similar this time period does feel like compared to 2008. And hopefully that doesn't happen. Hopefully it doesn't transpire that way. But then we can talk about what you can do about it, how you can prepare if that reality does turn out that way. So first and foremost, take a look at this chart, okay? In October of 2007, the stock market started to have some volatility, started to face some jitters. And at first, it was just a little pullback. I remember hearing some warning signs and reading some articles in the fall of 2007, but things were off just only 10%. They were going up, down, up, down. And then we started 2008, and the stock market was just churning lower. It was just chugging lower, okay? And then the summer came and things rebounded a little bit, and we were all still thinking, okay, maybe the market has had enough, and we've had our little downturn, and it will improve from here. And then, as you can see in the chart, that later on in the summer, it started trending back down. Now, compare and contrast that to right now. Okay, we've seen volatility started in October of last year when the Fed finally admitted, okay, inflation's not transitory. We had some significant whipsaws. October of 2021, the stock market went straight down. November, it went straight up when the Fed then came out and said, yeah, it's not transitory, but listen, we've got tools. We can manage this thing. And then December, it was just, half concern about inflation, what the Fed's going to do, half Santa rally. And then ever since January, it's been just the stock markets have been grinding lower. June, we'll see how this month ends up. June's been positive, I think, the 6 previous years, and has been positive 8 out of the last 10 years. We'll see if we get a little rebound here in June, or if after the inflation news last week, things are, end up bad again. But it's very similar in that the jitters started, the volatility started in the fall, and it just continued as the year started in 2028 through the midpoint of the year. The other big parallel that I'm going to make here is all of those jitters started right after we were all just sort of like, wow, can you believe this is what's happening? And it wasn't just in the market, but it was more so in the housing market and the economy. It was at the time leading up to the fall, to the end of 2007, we were all like, wow, I can't believe you can sell a house for that much. Or I guess there was just this unusual comfort with taking risk. Now, the interesting thing is there's risk always present in your financial life, okay? And yet there's times when it just doesn't feel like there's a much downside risk. There's just the reward when you take it. And we know that's not true. The risk is both downside and upside. And of course, long-term in the markets, long-term, there's obviously a lot of the risk that you take in the short term, you're rewarded for that over the long term, the patience that you have in the markets. But there was a season in 06, 07, certainly, 05, you could say, in the stock market, or excuse me, in the housing market, and in the overall economy, where there was this a little bit of, wow, I can't believe this is happening. I mean, this is great. I can't believe this is happening. An unusual comfort with taking a lot of risk. Guys, we felt that in 2021, did we not? I can't tell you how many times we talked about with individuals. We've obviously talked about it on this channel as well. Wow, these valuations are high. Wow, I can't believe you can sell your house for that. Wow, I can't believe this or that, right? It seemed as though people, I mean, just, and I'm not talking negatively on cryptocurrencies, but as of right now, they haven't been vetted. And there's cryptocurrencies that are created all the time out of thin air, and yet they increased in value extremely rapidly. And all sorts of additional, I mean, SPACs is another one. Did a few videos on that. These blank check companies, you don't even know what they're going to do and whether they'll be profitable. We're raising billions of dollars, and as if, well, it's going to make money because everything makes money. It seemed like the risk was lopsided. People were willing to and very comfortable taking lots of risk, expecting there only to be reward. And the third and most glaring parallel to me is during that time, and from the fall of 2007 to the midpoint of 2008, before we saw the crisis, what was the government saying? The government was saying, yes, this is a problem, but we've got it contained. We've got it contained. Yes, we know there's been rampant speculation in the housing market, and banking, mortgage standards have been lax, but we've got it contained. Subprime is contained. The worst of this is over, that sort of thing. We were reassured, and again, you don't want politicians out there banging a drum saying, the sky is falling. At the same time, you want to have some honest, if there isn't honesty, how can you really trust the message? And so we were being told all along, it's okay, the worst of this is over. What? Hank Paulson came out in the summer of 2008 and said, we believe this is behind us. And obviously there's some headlines here about how Ben Bernanke and others have said the same thing. Well, what have we been told all along? Well, we were told with inflation, I'll just reiterate this, we were told with inflation, we won't have any. I don't even think we can create it. That's what the Fed said. And then we've all seen the 60 Minutes clip where Federal Reserve Chairman Jerome Powell said, yeah, we basically just flooded the system with money. Yeah, we just created it. Yeah, we know that's what we did. And so, but it was under the guise that they're not going to be able to create inflation. And then when we all started feeling it was, nah, that's not inflation, that's just transitory. It is temporary. And then now let's redefine what temporary means. It's a spike in prices that won't come back down, but inflation's not really here. And then finally last fall it was, well, inflation's here, but we're going to be able to solve it. And all along, even when we get the higher than expected inflation reading, for May a couple weeks ago, it was still just, we've got the tools to manage this. We've got the tools to manage this. All along during this lead up of a lot of speculation and risk taking, then to the tremors in the stock market, all along the government, the officials have said, it's okay. We've got it contained. Everything's okay. Now, I'm not out there saying we're going to see another 2008. Eventually, I think it's very possible. However, right now there are some surprising similarities. And I think the one that most people are worried about is, in order to get inflation under control, which is the absolute highest priority, the Federal Reserve is going to have to be hawkish, or going to have to be mean, going to have to intentionally slow down the economy. Well, listen, when consumers, who are 2/3 of the economy, and businesses are already looking at inflation and hearing of a potential slowdown and saying, maybe I should be a little bit more guarded, maybe I should be a little bit more careful, that could then become a self-fulfilling prophecy. And if we've taken so much risk that now when a little slowdown occurs, it creates a domino. There's a domino effect where everything is sort of daisy-chained together. That moves a routine recession, which never feels good, into a crisis, which it seems like they all have been over the past couple of decades. So what can you do about it? Just last week, I aired a video about how to prepare for a recession. Take that real. Take that serious. Do that 3 bank account system and make sure you're paying down debt. Make sure your financial house is in order. That's number 1. Number 2, make sure you've got a certified financial planner. And that's not self-promoting. That's to say you need a coach and a guide. If things financially, what's the saying? Even a turkey can fly in a tornado, something like that. I'm not good with that saying. However, right, if everything's going well, you might not need much of a guide or some instruction. But when times get challenging and you've got to reprioritize what the most important things are in your financial life, or reassess risk, or reassess your goals, that's the time when you need a trusted professional on your side. Someone that's doing comprehensive financial planning can take a look at all 6 areas of your financial life, help you navigate those challenging times. And then finally, now is not the time to make some wild adjustments within your risk tolerance. I'm not saying that you shouldn't fine-tune your investment strategy, but it's not the time to go risk on, risk off. If we do see this time period draw more similarities to 2008, we'll see a risk-off time period, and hopefully you're using a momentum strategy to allow you to do that unemotionally. But make sure that you're taking a prudent approach to your investments and investment strategy that can ride through, whether, I'm not calling 2008, but whether we go through another one right now or not, okay? Work with your CFP on all of that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com, that's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.